Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good to have you back on. Thank you for making time today.
Good afternoon.
Well, let's start at the Fed and some issues that touch on the cryptocurrency space. Of course, that's been seeing extreme volatility in the last week, but a few things to think about. Fed Governor Lael Brainard again saying the U.S. needs to go for a digital dollar. And she also spoke about inflation, saying that the current spike in prices is likely to be temporary. Tell us about her remarks and what you see happening in the markets.
Yes, Lael Brainard, member of the Fed governors, said that there'll be clear case for a secure central bank-backed digital currency that could create a more efficient payment system and expand the financial services to Americans who have been underserved by traditional banks. Clearly, this comment's coming right after the Federal Reserve Chairman, Jerome Powell, announced that the central bank would publish a paper this summer laying out the board's thinking on the benefits and risks associated with a digital U.S. dollars. Now, as you know, overall cryptocurrency market size has increased and blossomed to as high as $2.5 trillion. Now has declined somewhat to about $1.5 trillion with the recent corrections. We don't think that the central banks, including Fed, will be allowing the cryptocurrency to take over the current dollars or any central banks-backed currencies. If that happens, then obviously you don't need central bank and you don't need government. So clearly there will be continuation of regulatory environment that tackles down the cryptocurrencies. However, though, the digital currency is very important in order to maximize the current changes that we are seeing in the Internet on Thing and all the digitalizations of the goods and services that we are actually providing and having. So we think that the digital currency market will continue to flourish in the future. It's just that it will be needed from the government back or government centralizations rather than decentralized cryptocurrencies. Overall, right now, the cryptocurrency market has, as I said, increased as high as $2.5 trillion, now declined to $1.5 trillion. And obviously, this will substitute some value of gold, which we have seen total size to be about $11 trillion worth. We don't think that the cryptocurrency is going to substitute any overall currency market, but just the so-called alternative assets such as gold.
Right, and the Bank of Korea said it's going to start looking at proposals for a digital currency later this year as well. But now, not only crypto, but stocks on Wall Street saw a bounce back overnight. The gain on the Nasdaq bigger, as was its recent loss. But the Nasdaq up about 1.4%, the S&P about 1%. What's behind these moves in the U.S. market?
Yes, on Monday, Dow Jones increased by 0.5%. S&P 500 gained almost 1%, and also Nasdaq was up 1.4%. We're clearly seeing some value coming back to buying the so-called tech stocks or the high growth stocks. We saw for the past 1 week or so, Nasdaq actually doing better than most of the other market. So far this year, year to date, Nasdaq has been one of the least performing out of all the indexes that we've seen. The reason for this is because we are seeing quite stable interest rate environment. If you look at 10-year government bond rate, it has actually declined to below 1.6%. And there have been continued concern about inflationary pressure and commodity price rise. However, we have seen in the last few weeks or so a commodity price stabilizing and oil price stabilizing as well. And inflation numbers, everybody are now recognizing that the number that we saw in April was temporarily. And yes, there are inflation that exists. However, though, We don't think that it's going to continue in a longer-term basis. If that's the case, the interest rate will stabilize, and that overall market will look very good as the economy recovers. A lot of people were talking about the earnings yield after inflation being negative, and that could be a sign for major correction. However, though, given the fact that right now we are still negative interest rate environment, including the inflation, which means that we're not in any close to market picking up anytime soon. We think that the earnings growth is ample, and that also liquidity is still ample as well, and inflation pressure is not going to be that significant in a longer-term basis.
Well, today Korean stocks had gains similar to those in the U.S. The Kospi back above 3150, the Nasdaq at about 960, a little above that. It looks like retail investors may be taking some profits. Tell us about the Korean market.
Right. After some correction yesterday, without any reasons, I guess, if you look at the Kospi has added about 0.86% for Kospi, and the Nasdaq was up about 1.44%. Most important thing is this. The Kospi is one of the most sensitive to economic recovery of global basis. If the global economy recovers, then high export-dependent Korea benefits significantly, and Korea being very cyclical, we are seeing a very strong earnings growth rate and economic recovery as well, and that should all pump into the equity market rise in the future. We think that the level of earnings growth that we're expected for Kospi to be well above 50% year on year. That is one of the strongest numbers that we have seen in the past decades. And also, if you look at the valuation-wise, it is trading at only 12 times PE versus S&P trading at 21 times. So clearly it's a deep discount with earnings growth that is higher than the U.S. market. And also U.S. dollar stabilizing or so-called somewhat of being a little bit depreciative that Korean want to appreciate in the future. That is positive news for foreign investors who are purchasing Korean equities. So therefore, net selling by the foreign investors should dwindle down, and also the fundamentals should support the Korean equity market to rise in the future.
Well, Mr. Yu, as we might expect now, data for May are showing a rebound in consumer confidence in Korea. People are feeling better about the economy overall. Tell us a bit about these numbers and what you make of them.
Yes, the composite consumer sentiment index is up to 105.2, which is significantly higher than 102.2 in the previous month. It was the fifth consecutive monthly gain and the highest since the June of 2018, with households more optimistic about the current state of the economy and also future domestic economic conditions, as well as the living standard and spending. These numbers are coming well because we are seeing very strong export growth rate. As I said before, Korea is highly dependent on export, and with that, further, I guess, benefit to the domestic consumption as well. Even though the Korea is highly leveraged in terms of the consumers, that the consumer debt as percentage of GDP is well close to 100%. That is negative news. However, though, as long as interest rate remains at around 2% level, that which we're seeing right now, the burden to the household will not be that significant. In the past, when we saw U.S. actually having a crisis on consumer debt, that's even though it was similar to the level of the GDP right now, Korea, but it was at much higher interest rate environment of 4 to 5%. If the Korea interest rate rises to 4 to 5%, then that could be very negative news. But right now, the interest rate is quite loose. That U.S. is still at 1.6% for 10 years, Korea being at around 2.1%. We think that these sentiment indicators are actually fitting positively for Korean economy as well as Korean equity market.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights with us as always. We appreciate it.
Thank you very much.